Hi guys, welcome back to my channel, Kelvin here. So last week the stock market was a super roller coaster. We have the S&P 500 falling by almost 4%, Tesla fell by almost 12%. Look at how the muscle could, my boy. The fear index weeks spiked to its second highest year to date. And the new Omicron variant is spreading worldwide, with China be like, Africa, how could you? Then on Friday, the crypto market decided to join in the fun, with Bitcoin crashing almost 20% and $300 billion were wiped off. But among that news, another big news happened, and that is Didi is getting delisted from the US stock exchange. When investors heard about it, the stock crashed by over 20%. So that is what I'm going to talk about today. Why is Didi getting delisted from the US? And what does this mean for all the other China stocks that are listed in the US, like Alibaba, Tencent, Neo, Xpeng? Will they all follow Didi and delist also? Finally, I will also talk about what should you do now? Should you still invest in China stocks or should you stay far away? But before I start, I would greatly appreciate it if you can help to tap the like button. In return, I will show you a cute chick. Alright, let's start right now. So let's first talk about what exactly happened to Didi. So it all began when Didi IPO on US Stock Exchange on June 30th and it went up by 1%. If you think 1% gain is very little, it's actually a lot, considering that Grab crashed by 21% on IPO day. Anyway, right after Didi IPO, China government immediately asked Didi to remove their apps from the App Store, saying that Didi was illegally collecting data and started investigation on Didi due to national security concerns. As you might imagine, this is super bad news for Didi because if you are an app company, but if you don't have any apps on the App Store, then GG lor. Then in November, Didi announced that they'll be relaunching their app soon, which is great news for them. But wait, that's not all. Because right after that, there were reports that China asked Didi to delist from the US, and soon after, US announced that they will start delisting foreign stocks if they don't meet audit requirements. With Didi kept in between China and US, they finally pay tahan and be like, okay lah, delist lah, aiyo. So they started the delisting process and plans to list in Hong Kong instead. Throughout this whole saga, Didi stock fell by over 60% since its IPO, which is barely 6 months ago. Yeah, that sucks. So what does this mean for all the other China stocks? Will they kena tekan or pressured to delist also? Well yes, but no. If you take a look at the US delisting rule, it's not the US wants to anyhow delist foreign stocks. They even gave companies 3 years to comply before delisting. There's a board called Public Company Accounting Oversight Board, or PACAO, which is basically to inspect its company audits to make sure the companies are not doing funny stuff to their accounts. And so far, all of the foreign companies have cooperated, except for, you guessed it, China and Hong Kong. Why? Because China actually blocked US regulators from inspecting the audits. You know, this is like when a student is naughty in class, the teacher want to cane the student, but the parents be like, you cannot anyhow cane my boy. So now, the China companies are cut in between US and China. If US inspect, the company will make China angry. If they don't inspect, the company will make US angry. So how? GG lor. So there were a few news that came out. On December 1st, the news said that China is planning to close the loophole that let companies list overseas. The loophole is basically using something called Variable Interest Entity, or VIE. Here's why. Under the Chinese law, foreign investors can't have ownership in some Chinese industries like creative, energy, IT, automotive, and education. So how are companies like Tencent and Neo are able to list in US? VIE. Let's use Tencent for example. This chart looks sibei complicated, but I will try to simplify it. At the bottom, we have the companies in China. Their real business is here. Then offshore, there's another Tencent company listed elsewhere. For example, Cayman Islands. Take note that this Cayman Tencent doesn't have anything going on. There's no business, no office, no employees. It's basically a shell company. But what the Cayman Tencent has is that it has a claim on the profits and control of assets on Tencent. Not ownership, just a claim. Then this Cayman Tencent is listed in the US. So when you are buying this Tencent company from the US, you are not actually investing directly in China's Tencent. You are just investing in the Cayman Tencent. Okay, yeah, this is the same for many of the China companies listed in the US. Alibaba Cayman, Neo Cayman, Didi Cayman, Didi.com Cayman. If you don't know, now you know. So that's how China companies are able to list in the US. And according to the report earlier, China plans to close this loophole. But then another report came out saying that China denies banning VIE listing. Basically, they say, VIE ban? Fake news. Personally, I'm not sure which report to believe because first, I see news saying that China doesn't want to cooperate. Then in August, I see news that China wants to cooperate. then I guess nothing happened in between, otherwise Didi wouldn't have to delist already. Meanwhile, just a few days ago, China said that they are conducting candid and constructive communications with US, saying that as long as there's mutual respect and trust, they will certainly be able to find a mutually acceptable path of cooperation. I even found a 2016 report saying that Alibaba and Baidu accepted US audit inspection. But in 2021, it seems like they are still not complying. So, one say like this, another say like that, we know lor. But I guess what they say doesn't really matter now, right? The more important question is, will companies like Alibaba or Baidu delist from the US market? Personally, I think the chance of China companies delisting is very low, but there's still a chance. It's like what desperate guys think when girls talk to them. So you're telling me there's a chance? Even though China is allegedly having talks with the US, the rule already says that the companies must comply within 3 years or they will get delisted. Anything could happen within 3 years, even the pandemic could end in 3 years. Pray. I believe that within these 3 years, US and China will come to an agreement. The reason is because China also don't want the companies to suffer. Because if the China companies delist from the US, the companies will lose a lot of opportunities. US will lose a lot of opportunities. China will also lose a lot of opportunities. In short, you die, I die, everybody die. But let's say if US delists China stocks, what will happen to the investors? Nothing much, because there's this thing called fungibility. For example, one Alibaba share listed in the US is worth 8 Hong Kong Alibaba shares. This means that you can go through your broker to convert the shares if ever the US stocks are delisted. Or you can just sell the US shares and buy China shares directly. Therefore, the delisting doesn't really affect US investors. You will suddenly lose your stocks just because it has been delisted. But whether or not you will lose money in the stocks, that one totally different matter. Because whenever there's bad news, the stock will usually drop. Like Tencent dropping by over 40%, becoming 6 cents. 448 Hong Kong dollars. So here are my thoughts. Investing in China stocks is like investing in commodity stocks. There are 2 layers to it. For commodity stocks, first, the company must do well, and the commodity price must do well too. If the company have a very good sale, but the commodity price drops, then the company will do very badly. On the other hand, for China stocks, the second layer is the government. You need both the company to do well and have the government support to do well. This year alone, China has been cracking down on a lot of companies like Tencent, Alibaba, Pinduoduo, and all of it affected the companies a lot. The reason is not because China wants to kill the companies. Instead, it's because the companies have gone against the China's interests. So if you go and check China's defense policy, there's 2 in particular. First one, to safeguard people's security. For example, China felt that Didi were collecting data illegally and it went against these rules. Second, to support the sustainable development of the country. For example, Alibaba and Tencent were preventing their competitors from competing. So this means that only Alibaba and Tencent could quite big and all the other smaller companies couldn't even compete. And China didn't like that. It needs to have sustainable development as a whole. Even when Evergrande was going to go bankrupt, China didn't want to pay for it. Like how US bailed all these banks when they were going bankrupt in 2008. China basically told Evergrande's boss, this is your own problem, you bail out yourself. So if you are investing in China stocks, just be aware that the Chinese government will always be around to affect your investments. Despite all this, there are still many big investors who are confident in China companies. Like Ray Dalio, who is looking to raise money for his China fund. Charlie Munger, Warren Buffett's right-hand man, feels that China companies are better than US companies. He even doubled down on Alibaba after it has dropped a lot. I do understand why some people prefer to invest in China stocks, even though it has an added layer of risk. Mainly because China companies have the government's backing and it is super duper cheap now. There are reports that China will overtake US by 2028. When that happens, the China companies will definitely benefit from it. So I think if you are still bullish on China stocks, it's alright to invest in them. But my advice is just buy the stock straight from Hong Kong or China. Don't buy the stock listed in the US. Or if you want to invest in ETFs, get those ETFs that don't have US version in it. For example, KREX stocks are mainly ADR, meaning they are listed in the US. Instead, get those like CQQQ where the holdings are not in US. That way, you don't have to worry about your stocks getting delisted. Personally, I'm actually quite bullish on China companies, but I don't invest in them. Instead, I prefer to just invest in US companies for now. The reason is US companies are so much easier to understand. Company does well, stock goes up. Company does badly, stock goes down. So simple. For China companies, it's totally different story. But what do you think? Do you think China companies are good? Are you investing in China companies? Let me know down in the comments below. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.